Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook, we're going to start with the most important events of today and of course of yesterday. What we saw is in the news a report that 4 ballistic missiles were fired from North Korea, 3 of which of course ended into Japan's economic territory. Now what we saw in yesterday's trading, we saw the yen was bought by traders against the US dollar and other major currencies as well, as the particular instrument is very lucrative, especially in times of uncertainties. However, before we actually go to that, let's move here to the chart so we can take a look at the currency pairs, which made a little change throughout the yesterday's session. We saw the euro versus the dollar taking support around the 50 and the 200 exponential moving average, remaining at a very tight range between roughly around 1.0576 and 1.0625 to the upside, which of course is also a very good way to trade with a good sideways directional strategy. You can trade the market. However, a breakout to the upside, we can expect the trend to resume, which it could happen in the early trading hours of the European session, as we're expecting to see the European zones gross domestic product later throughout the day, and of course later in the day the consumer credit change for US, which will of course bring additional volatility throughout the US session later on into the trading day. Also, one of the most important things of today's trading, especially for traders that will be focusing on the sterling versus the US dollar, as we would do that as well. As right now we can see that the support area of 1.0220 is broken, so the trend could the risen downtrend could be expected to continue towards 1.2148 support area, which is one of the majors. Before that, it will just have to take through some minor areas as to 1.2180 and of course 1.2190 as well, which is the support at the moment. However, also another instrument that would be traded today mostly from traders, this is gold price, gold as a commodity. However, before we end up into the chart of gold, let's have a look at the yen and the dollar. You can see USD JPY pair still, however, trading in a very tight range despite the recent downside direction from dollar versus the yen, as the yen was bought against most of the majors due to the 4 ballistic missiles, as I mentioned earlier. Right now it's a very tight 35 pips range between the 50 and the 200 exponential moving average, so there is nothing much we can do there. Also oil is pretty much in the same condition. Nothing major could be done over there. As we can see, the support in resistance areas right now are just making a very tight sideways direction, about 40 cents of particular move, which could be also traded, but it's not that lucrative as gold actually looks to be. Right there is overtaken. We can see directional movement to the downside, which could actually resume the short-term downtrend towards targets around 12.19 and downwards to 12.10, which are the major support areas. However, let's talk a little bit more about gold. Having a brief look at the daily chart, we can see that the uptrend, midterm uptrend, is now broken. So downward direction could be expected to extend towards areas around 1180 in the midterm. So right now we're mostly focusing on the short-term 50 exponential moving average, which, as I mentioned, is a major support area at the 1222 level here. So therefore we need to see that broken, and then the prices could be expected to fall further as rate expectations in the near term. This would be next week. We can see March 14 and 15, another rate hike from the Federal Reserve, but that of course would depend on the inflation and job data later on throughout the week. Major fundamentals, ladies and gentlemen, of course, traders would be focusing mostly on everything this week, and of course, we would be able to keep you up to date with all of that. Thank you very much for joining. I'll see you again tomorrow, and please like or subscribe. See you again. Bye-bye.